Hey everyone, I'm Mr. Tommy, and today we are diving deep into a geopolitical shockwave, the 2025 Iran-Israel conflict. Events like these don't just fill up our news feeds, they sent massive tremors to the entire global economy. Now, for investors, that creates a ton of risk, for sure, but it also creates incredible opportunity if you just know where to look. So let's break it all down and find the key trends that are bubbling up from the chaos.
To really get a sense of the scale here, let's just start with one number, $5 billion. That's what this conflict cost Israel in the first week, just 1 week. Now, that's not just the line item on a budget, it's a sudden, massive shock of demand for some very specific industries. And that right there, that's our starting point for figuring out where the money is about to go.
All right, really quick but super important note before we get into the thick of it. What we're doing here is for educational purposes only. We're building a way to think, a framework for analysis. This is not financial advice. Any investment decision you make is, of course, 100% up to you. Okay, let's do this.
So here's our game plan for today. We're going to start with that big initial economic shock. Then we'll explore 3 key sectors that are getting totally reshaped: defense, energy, and infrastructure. After that, we'll take a look at risk and what's happening with so-called safe havens, and then we'll wrap it all up with a simple framework you can use to analyze stuff like this yourself.
First up, let's talk about the immediate impact. Whenever a crisis like this hits, the very first thing you see is that financial shockwave. It tells you a whole lot about the market's initial gut reaction, and honestly, it gives us clues about where the bigger, longer-term trends might be headed. This quote here really just nails it. In the world we live in today, so interconnected, no conflict happens in a bubble. A regional war, even a small one, instantly sends ripples across the entire global economy. And you better believe the markets react in a split second.
And that reaction is usually the market's classic fear response. When uncertainty skyrockets, investors dump anything they see as risky and they run for cover. We call this a risk-off environment. It's why you see those big, sharp initial drops in the major stock indexes. And this is the important part, inside all that chaos, certain sectors start to show surprising strength, and that's where things get really interesting for us.
Okay, so let's zoom in from the big, broad market to our first key sector, defense. This conflict is literally rewriting the playbook for modern warfare, and when the rules change, that redirects trillions of dollars in global spending.
So what's the single biggest lesson from all this? The battlefield has expanded. It's not just about tanks and jets anymore. It's gone digital. We're seeing this massive rise in what's called asymmetric cyber warfare. Just think about it this way. Instead of launching a super expensive missile, an attacker can now use AI to go after a country's power grid or its banking system. It's cheaper, it's way harder to trace, and it can cause just as much damage.
And look, this isn't just some theory. Check this out. This is a real cybersecurity advisory warning about specific Iranian cyber groups. The digital war is happening as we speak, and it's creating this huge, urgent demand for advanced cyber defense, and not just for governments, but for pretty much every major company out there.
So where's the money actually flowing? Well, it's getting concentrated in a few specific areas. Number 1, AI-powered electronic warfare. We're talking systems that can jam enemy drones and mess with their communications. Number 2, counter-drone tech, because drones have become a massive threat. 3, a huge push for cybersecurity to protect all that civilian stuff we just talked about. And finally, there's just the basic need to restock advanced missiles. These 4 areas are the new growth engines for the entire defense industry.
And that, of course, brings us to the major players. You've got companies like RTX, which is a leader in those electronic warfare systems that are now absolutely essential. You have Lockheed Martin, a giant in advanced aerospace and missile defense. And then there's Northrop Grumman, a total powerhouse in both cybersecurity and the unmanned drone systems that are defining these new conflicts. These aren't your grandfather's defense companies. They're on the bleeding edge of this new era.
All right, next up, let's look at how this conflict is basically putting a chokehold on the world's supply lines. When a key region like the Middle East gets disrupted, it sends huge shockwaves through the energy markets and global shipping. Let me show you how.
I want you to just picture a critical shipping lane for global oil. In normal times, it's boring, right? It's predictable, it's a low-cost operation. But in a crisis, man, everything gets turned upside down. Ships have to be rerouted, insurance costs go through the roof, and just the fear of a disruption can send energy prices soaring. That is exactly what we've been seeing.
And here is the key takeaway from all that. Chaos for supply chains can actually mean big profits for certain shipping companies. With these longer, riskier routes, the rates they can charge for crude tankers and dry bulk shippers, the guys who move raw materials, have just skyrocketed. As you can see, their stocks have blown past the broader market. It's a perfect example of opportunity being born from disruption.
This instability creates a really fascinating split in the energy sector. In the short term, high oil and gas prices are a huge win for giants like Chevron.
But in the long term, this same instability makes countries absolutely desperate for energy independence. And that is accelerating the push toward alternatives like nuclear, which benefits innovators like Oklo, who are busy building out a domestic nuclear fuel supply.
This leads us right into our third major theme: infrastructure. The conflict has been a massive wake-up call, showing everyone just how fragile our global supply chains really are. So now there's this huge push to rebuild and reinforce them for a new, much more uncertain world.
This quote right here absolutely nails the shift in thinking. For decades, it was all about just-in-time efficiency, making things as lean and cheap as possible. Now, the new buzzword is just-in-case resilience. Companies and governments are finally realizing that a secure supply chain is way more valuable than a cheap one. And this new focus on resilience is driving some seriously powerful megatrends. We're seeing enormous government spending on infrastructure, a total rethink of how defense supplies are sourced, and a huge push to build tougher, smarter energy grids using AI. A lot of these trends were already happening, but this conflict has just poured gasoline on the fire. So this creates a massive opportunity for the companies that actually build this new, more resilient world. We're talking about firms like Jacobs, which handles these huge, complex engineering projects, and Quanta Services, a key player in modernizing our entire power grid. They are standing right in the path of a multi-trillion-dollar global upgrade. Okay, but with all this change, there's always risk. During a crisis, investors usually run to so-called safe haven assets. But what this conflict is showing us is that the very definition of safe might be changing right under our feet. The numbers here are pretty wild. In the month right after the conflict kicked off, gold, the classic go-to safe haven, actually dropped. The Swiss franc, on the other hand, it held up pretty well. And then look at Bitcoin. It showed some surprising stability, even finishing a little bit in the green. The old rulebook? It doesn't seem to apply anymore. And this is just such a powerful reminder that there's no such thing as a guaranteed safe haven. What worked in the last crisis might not work in the next one. The real lesson here is that diversification is everything, spreading your risk across different types of assets that behave differently when things get stressful. Okay, we have covered a ton of ground. So let's pull all these different threads together into a simple, practical framework you can use to make sense of any major geopolitical event that comes our way. Look, the goal here is never about predicting the future. No one can do that. It's about having a reliable compass that helps you navigate through the inevitable fog of market uncertainty. So here it is, that four-step compass. First, start with the big picture. What's the scale of the event, and how's the market initially reacting? Second, follow the money. Which sectors are getting directly hit or helped? Third, pinpoint the key players. Which companies are the leaders in those sectors? And fourth, manage your risk. Understand which safe havens are working, which ones aren't, and what's getting hurt. It's a simple process, but it is a powerful way to turn all that chaos into clarity. Hey, if you found this breakdown useful and you want to keep sharpening your ability to think strategically about the markets, make sure you subscribe to the Phonotomy channel. We're going to be doing a lot more deep dives just like this one. Thanks for watching.